Hi, Srini Palya, Global CEO of Wipro Limited, and you're watching Taking Stock.
And the buyers come roaring back in no uncertain terms here on this Friday, November 14th, because at the open today, the S&P 500 had been down as much as 1.3%. That follows yesterday's big sell-off led by tech and discretionary, where the S&P 500 in yesterday's session finished down 1.6. We thought that would be the tail of the tape on the Friday, but investors across the major market indexes had something different planned for this Friday. We don't exactly know if we'll finish in positive territory, but we are well off those session lows at the open today. And that and much more sets the stage for today's show, Friday edition of Taking Stock. Welcome to it, one and all. You're watching Taking Stock. I'm your host today, JD Durkin, just mere moments away from the ringing of the one, the only, truly iconic closing bell. The team from Tejon Ranch, ticker symbol TRC, here at the New York Stock Exchange, set to do the honors. That big reversal we had across the major market indexes today were led by tech. A lot of key names that were down in yesterday's session, like NVIDIA and Palantir and AMD, Tesla. Different tail of the tape today, all up in positive territory today. Oil benchmarks up as well. WTI priced at just under 60 a barrel. Brent priced at about 64 and change per barrel. Precious metals in retreat. That's true for both gold and silver. And we're going to talk a lot about Bitcoin's big decline on the day. But first, we're going to bring in the closing bell. The team from Tejon Ranch here at the New York Stock Exchange set now to do the honors. On this Friday, the crowd goes wild, and that means we officially bring about a close, not just to today's price action, but to a very busy, jam-packed week across the major market indexes that did see the S&P 500 week-to-date fall about 0.6%, and it's going to finish down 0.05%. The Dow down 0.6, the NYSE Composite Index down 0.3% on the day, and the small caps in the green. You love to see the Russell 2000 get in on the fun. Looks like the Russell will finish up about 0.2% here for the final tail of the tape on this Friday. Let's bring in Jay Hatfield. He is the CEO of Infrastructure Capital Advisors now. He is our kickoff guest on this Friday edition of the broadcast. Welcome. It's great to have you here today.
Thanks, Great to be on.
Can I get your perspective first and foremost? Let's take a step back. I mean, this has been a wild week. We've gone back and forth between risk off to risk on. What have you noticed across the major market indexes on a crazy few days?
Well, we were actually expecting this. It's normal for the market to pull back after earnings. So we had all the tech earnings, and you saw that pullback. But what was encouraging is where the market really bounces at the 50-day moving average. And that's really, so we crashed below it, came right back up to it, and then bounced off that. So that's very bullish from a technical perspective. So we're still bullish on the market. I have a 7,000 S&P target for year-end.
Your year-end S&P target still sits at 7,000?
7,000, yes. So we have 300 points of upside, roughly.
There we go. So we bounced off that 50-day moving average on Friday's session of last week. So it's good that you're paying attention to the technicals.
Right.
Talk to me about some monetary policy concerns. What does the Fed do here? We're about 3.5 weeks out from the next and final FOMC decision of the year. Government data's been kind of tough to come by. What are you watching for out of the FOMC?
Well, we actually don't expect them to cut, but we're not concerned about that. The only way they'll cut is if we have a very weak labor report, and we really have no idea what that's going to be like. It's normally inaccurate anyway. It's probably going to be more inaccurate than ever. But we're not worried about that because the next Fed chair will cut rates, and you'll notice the 10-year has not gapped out. It trades at 100 over the expected rate that it's going to be cut to next year. So rates have not been disturbing this market. It's been completely a tech wreck, and we don't mind that. We have conservative funds. They've actually been outperforming, so it's good to discipline investors and remind them being not in 100% tech sometimes does make sense.
Yeah, you mentioned the 10-year Treasury yield up only 2 basis points on the day, but we did see kind of Treasuries fall yesterday in the session and yields rise on the backdrop of maybe some concerns over bond issuance and things like that. Talk to me about the fundamental flaws that you see right now with the Fed and some of those bigger considerations. We're talking a lot about the data that they're taking into consideration. What do you see for this current iteration of the Fed as you head into the last meeting of the year?
Well, quickly, they have 3 problems. The 2% target's way too low, should be 2 to 3, then we could cut. They don't properly measure inflation, so CPI is distorted because it uses a historical delayed shelter component. And then finally, they're terrible forecasters. They don't use the money supply. Inflation comes from debasing the money supply. They ignore it. And so they're really fundamentally flawed, and hopefully the new Fed chair reforms the Fed.
What are you seeing out of the big tech names, the mega caps? The vast majority of them have already reported quarterly earnings, but as we know, you got the big one coming up next week, NVIDIA. What's on your radar?
Well, that's why we thought the market might pull back. Is that we've said 100 times we're not in a bubble, but that doesn't mean we're not fully valued. So when you hit that full value, which happened to be around our target of 7,000, but we still like some of the Mag 8. So we still like Amazon. We think that's cheap. We like Marvell. It's not in the Mag 8, but it's a competitor to Broadcom.
I was going to say, you added an 8 there. I was wondering what the 8 was.
Right, yeah. Well, so we include Broadcom and Tesla as well. But Marvell's a competitor to Broadcom, so we like that. That's cheap. So I would urge investors to look at the PEG ratio, it's a PE to growth, and don't overpay. When you buy Palantirs, et cetera, you can really get smashed in these downturns because there's no valuation floor. So we are optimistic, and we're optimistic about NVIDIA, although expectations are going to be high like most tech stocks.
Yeah, of course, and we've seen NVIDIA beat previously and maybe not be quite enough for investors. And good note there on PEG ratio, gives you much more of an apples-to-apples comparison than simple PE ratios. We have to leave it there, but you're an outstanding kickoff guest here to have for the broadcast.
Great.
Please
Thanks,
come back.
AJ.
We'll do
Great
it again
to see you.
soon.
Thank
That
you.
is Jay Hatfield. He is the CEO of Infrastructure Capital Advisors. Have a terrific weekend. Josh, going to grab your microphone. Todd, my man, you and I are going to go for a walk, and as Jay and I were just talking about, it is all eyes on the central bank, 3.5 weeks out from the next and final FOMC decision of the year. So we'll take a look at the latest event contract, poly market odds to the question, what will the Fed do in December? Like Jay was saying, the narrative had been all year that we had been expecting an interest rate cut of 25 basis points. That officially changed today, both for CME Group and for poly market participants. 35% chance of no change in the FOMC's rating, 46% chance of a 25 basis point cut, and a 2% chance of a 50 basis point cut. Much more in alignment with CME Group, with inflation still at 3%, maybe a bit too high for the comfort of FOMC policymakers. We get that decision on Wednesday, December 10th. All right, Todd, now we'll take a look at two NYSE notable companies here on this Friday. We'll start with a look at Walmart because this had really gapped down at the open earlier today. CEO Doug McMillon stepping down here after more than a decade on the job. The stock gapping down. It was at some point down as much as 3.5%. It traded all the way back down to $99 a share, a level Walmart had not seen since September 3rd. They report quarterly results next Thursday. We are expecting earnings per share of 60 cents. And finally, Todd, we'll take a look here at one of the best performing names in the S&P 500. That's the team from Oracle, up almost 2.5% to the day. We're talking a lot more about circular financing of the overall AI trade this week, as well as Oracle's ongoing corporate bond issuance storyline. The stock is down 35% from its recent peak on September 10th, but shares of Oracle still up 34% year to date. FinTech TV's very own Remy Blair sat down with Mike Champion of Talif to discuss the ways that Saudi Arabia is emerging as a global hub for innovation. Take a look.
Well, joining me this morning is Michael Champion, CEO of Tahaluf, as well as Saudi Arabia's leading business events company. Good morning, Mike. Thank you so much for joining me today.
How are you doing, Remy? Good morning.
Well, I'm doing very well. Thank you so much for joining us. Well, Tahaluf has become a key player in positioning Saudi Arabia as a global events destination. So how are your flagship events helping to attract international investors as well as drive confidence in the kingdom's broader economic transformation?
You know, Saudi Arabia has always been a compelling and potential investment opportunity for international investors. But what we're seeing now is that the capital flows going into Saudi are becoming extremely interesting. If you were to take any of our flagship events, the likes of Leap, for example, which has in only a short amount of time become the most attended tech event in the world. There's over 200,000 attendance that comes to this. 2,000 investors are on the investor program alone. And they'll fly in and they'll conduct many thousands of meetings with potential startups and invest in those. And then if you were to take a look at Cityscape, which is happening next week, Cityscape attracts a smaller amount of investors, but they're institutional investors, the likes of BlackRock and Hines and BNP Paribas, for example, Capitaland. These will fly in principally looking to speak with funds and entities in Saudi that are really financing the giga projects and some of the major developments that are happening in Saudi Arabia.
And as you mentioned, there is growing focus on quantifying the real economic value of major events. So can you share how Tahaluf's portfolio translates into GDP contribution as well as job creation, not to mention foreign investment inflows for Saudi Arabia?
That's a really interesting question because in the trade that I'm in, which is organizing mega events, it often gets sort of overlooked. But let me give you an example of this. The Football World Cup is in the Soccer World Cup in Qatar recently. That had an economic impact over its construction and lifetime of $17 billion, $17 billion. That's its own calculations. Now, we've actually done our own calculations on the events that Tahaluf have managed to do over the last 3 years since it's been founded from 23 to 25. And our economic impact is conservatively estimated at $17.6 billion.
Saudi Arabia's diversification journey relies on building globally competitive industries beyond oil. So, how does Tahaluf's model of event creation as well as international partnership align with Vision 2030's broader diversification goals?
Yes, we're a for-profit enterprise, but we only really operate in areas that the government considers to be strategic. And the reason why we operate in areas that the government considers to be strategic is because we want to be able to scale very quickly events to help make Saudi Arabia become a global events hub. Now, you don't become a global events hub without having world-class, very substantial events. And you don't get world-class events without them being strategic, because you need the support, the backing, and the full alignment of government partners in order to do that. You mentioned earlier on that Tahaluf is a joint venture of Informa and the Saudi Federation, and also of the Events Investment Fund. Well, the Events Investment Fund is actually a subsidiary fund of the National Development Fund, and it's also chaired by His Royal Highness the Crown Prince. So we want to make sure that the events that we do really chime with the priorities of the government, and by doing that, we get all of their sort of impetus and advice and backing behind it as well.
Well, Michael, thank you so much for joining us this morning. The FinTech TV team will be there live with coverage from Cityscape Global all of next week. Thank you.
Thanks, Remy.
Welcome back to the broadcast. You're watching Taking Stock, still live from the trading floor of the New York Stock Exchange. Time now at this hour for a few fintech, crypto, and AI-related headlines to finish up your trading week. First up, the crypto majors. Man, oh man, Bitcoin, Ethereum, Solana sliding further today after the Q4 bear market continued to intensify. Get this, Bitcoin falling below 95,000 for the first time since May 6th, down 4.7% on the day, currently trading at 94.7 and change. Next up at this hour, Amazon and Microsoft are backing the GAIN AI Act. It's a new bill that would force NVIDIA to prioritize U.S. demand for AI chips over exports to China, given the cloud giant's preferential access. And finally, investors yanking $870 million from Bitcoin ETFs yesterday. It is the second largest outflow on record, deepening this ongoing crypto sell-off. And thank goodness for us all, I have a true pure play expert here in all things crypto to help us understand what is going on. A good friend of ours here on the show. Please welcome Andy Bayer. He is head of product and research at CoinDesk Indices. Thank you for being here.
I thought you were going to say, thank God it's Friday and we can go have a weekend, but crypto doesn't have weekends, so we're going to have to watch closely to see what happens tonight and until Asia opens Sunday night.
No, you're not kidding. So yeah, so at least, I mean, I usually cover equity, so right. Yeah, I usually sleep well on Saturdays and Sundays until futures at Sunday at 6. You track the stuff all the time. What do you see? I mean, we got to start with Bitcoin. It's clearly the biggest headline here of the moment, falling below 95K.
Yep.
What do you see that you think we should pay more attention to?
You know, it's going to be tough. People like to think of things in units of years, and Bitcoin started the year at around 93.4, so we're only about, $1,300, $1,400 above that right now. That's kind of a sickening stomach story right now. The market went from being ebullient to tender to soft to vulnerable, and now 100 broke, then 95 broke. So It's looking like, the market's searching for direction, but it is certainly an unsettling time.
How do you take what you just described as an unsettling time for the way Bitcoin's been pricing relative to the general conversation of seasonality? You and I have talked about this before.
Yep.
Q4, this can usually be, and oftentimes, a very strong stretch for the crypto majors.
People look for patterns, right? Bitcoin doesn't have its own news cycle. It doesn't have a PR department. It doesn't have quarterly earnings, right? So people think about, October was supposed to be Uptober. We call it the sober Uptober, right? With all the integration, the fact that, more than 10, 12% of Bitcoin is now held in ETFs and DATs, it's harder to think about these cycles holding the same way that they did years ago when it was largely an offshore, decentralized, kind of currency. That being said, look, I think we need three things. We need better liquidity, we need more certainty, and we need a catalyst. That has got to put a little bit of energy back into equities and put a little bit of energy back into crypto, all risk assets. Crypto right now is going to just be hunting for direction, and I think we've seen a lot of that in the equity world too. That's how things are feeling. If you look at how crypto's, Bitcoin's volatility profile, the options flow, it's all acting more equity-like than store of value-like right now. So the market is just uncertain, and the markets hate uncertainty. At least it's happening slowly. At least it hasn't been a surprise-driven situation. We've come all the way. CoinDesk 20 was up 38% on the year at the end of August. Now it's down 3% on the year. That's a huge shift, but it's happened gradually. So positive signs, right? Things have happened gradually. Yesterday, the first XRP ETF was launched by Canary that had record volumes. It was the best ETF launch of the year. It had $245 million of inflows, and it had $58 million of volume, so that's good. M&A is still happening, banks are still getting involved, the stablecoin and tokenization themes are still strong. Slow money has never been better, the fast money is still super uncertain.
I'm almost out of time. We got about 30 seconds or so left. How does this set up for the rest of Q4, you think, given everything we had from October 10th and since then?
Look, we still think the market over the long period is one of the best growth opportunities in the world. So people who are investing are minding their portfolios, licking their wounds a little bit, but they should read the news and keep up to date on fundamentals. Look, we're an indexer, so we like the idea of indexing and not picking certain names and not trying to time the market. We think over time that will be the best way to go. So watch your Bitcoin, watch your stablecoin and tokenization sensitive names, pick your blockchains, look at index products, hold on tight.
And listen closely to everything Andy Baer of CoinDesk Indices teaches you every time he does a segment. My man, it's always wonderful to have you down here. Come
Thanks
back
so
anytime.
much. Have a good weekend.
Enjoy your weekend tracking price action and beyond. The great Andy Baer. Folks, don't go anywhere. Much more Taking Stock coming up after this. Welcome back to Taking Stock, live from the trading floor of the New York Stock Exchange. Now we'll bring you the latest headlines you need to know in the world of startups, raises, and rounds for your Trading Friday. First up, AI coding tool Cursor raising another $2.3 billion, yes, billion with a B, dollars, just 5 months after its last round. Next up, OpenAI leading a $15 million seed round for Red Queen Bio. It's a new startup aiming to prevent the development of AI-enabled bioweapons. And finally, Swedish autonomous trucking startup Einride is going public in a SPAC deal to the tune of $1.8 billion. The New York Stock Exchange's own Ashley Mastronardi sat down with Omri Shatire of SimilarWeb to discuss all of the ways that the company is driving new opportunities for analytics firms and beyond. Have a look.
When NYSE listed JP Morgan and Walmart need data intelligent insights, they rely on SimilarWeb. Joining me now is SimilarWeb's VP of Data and AI, Omri Shatire. Welcome to the New York Stock Exchange.
Thank you, Ashley. It's great to be here.
So what is SimilarWeb? And besides JP Morgan and Walmart, who are some of your customers?
So we're in the business of helping companies understand and compete in the digital world. So, it used to be in SEO and content and understanding paid marketing or organic marketing in Google. And the world is now changing a bit to the Gen AI world, to ChatGPT and the LLMs. And essentially, we have customers from all around the globe, all the different industry, from shipping to the biggest financial services, investors, and we're covering the entire globe, which is very fun for me as a data guy.
And speaking of Gen AI, how is that impacting the internet? I know it's a really big question.
No, it's a great question. I think it's one of the questions we get a lot from all of our customers. How should they change their strategy? How should they adapt to the world that is now changing? And there's a few very interesting facts that, Google is still king. It's still winning. They're not losing a lot of traffic, but ChatGPT is growing at a tremendous pace. They're now the 6th largest website in the world. And it's not only that, they're sending traffic which converts better. So the traffic coming is better for the website. It's converting at a 2x pace than regular search and traditional methods.
And I understand, speaking of, that you have technology that helps companies understand what ChatGPT and perhaps other AI platforms are saying about their brands or their businesses. Can you share more about that?
Definitely. So we're seeing essentially where companies getting their traffic from. So if they're coming from ChatGPT or from Gemini or from Claude or other LLMs, we see this actually happening in a daily basis. And we've now released our new Gen AI intelligence, which means we see the traffic, but also what are people searching on those Gen AI platforms. So is your brand being mentioned for different questions, for different topics? How much is it being mentioned? And how can you win this? What you need to do in order to really drive traffic from this? And it's a great way to convert more people to understand your value, your business, and the products you're offering.
And how is Gen AI creating new opportunities, if any, for companies like SimilarWeb?
So it's a great question, and also one of the things we see is that ChatGPT users are actually 99.5% using also Google, and people need to understand that. In SimilarWeb, we see both. It's not only we see traffic from ChatGPT or from Google, but we see what's happening in both, and the pie is getting bigger. People are using both platforms, and they're getting more traffic and more insights from those platforms. So we can see that and help our customer understand what they need to do.
So if you're a company and you do have these insights on what ChatGPT or an AI platform is saying about your company, and maybe it's not the most positive, is there any way to change that?
Yeah, so we see it, and it's constantly changing. For example, we've seen, and everybody knows about that Reddit has been a winner until August. Like when ChatGPT mentions your brand, it then sends traffic to Reddit. We see this actually changing. So the LLMs are constantly changing the way they're finding information. It used to be Wikipedia and Reddit. Now it's more strategic website. It might be partnerships that you're doing. It might be pages you're listed on or appearing on, which are not necessarily just Reddit or Wikipedia. So you need to track that in real time.
Omri Shatire, VP of Data and AI at SimilarWeb. Thank you so much for joining us at the New York Stock Exchange.
Thank you very much for having me.
Welcome back. This is Scarlett Sieber from Money 2020, and we're here with another segment of Hindsight 2020, your weekly financial history lesson that proves history doesn't repeat, but it sure loves a good remix. This week, we're going back to November 9th, 1989, the night that the Berlin Wall fell. Yes, I know what you're thinking. Scarlett, this is a finance show, not a Cold War documentary. But trust me, this moment wasn't just political. It was a financial big bang, and the rest of November that lasted beyond that laid the foundation for what was to come. When the wall came down, the world didn't just watch, it recalibrated. Central and Eastern Europe went from being locked behind the Iron Curtain to being wide open for business, literally. Overnight, dozens of countries went from command economies to free markets. And when you switch from communism to capitalism, you don't just need hope and hustle. You need infrastructure. You need things like banks, stock exchanges, regulators, accountants, and yes, even auditors. No hate auditors, but you know. Western banks saw the opportunity too, and they moved fast. Citibank, Deutsche Bank, ING, they weren't just opening branches. They were laying the financial foundation for entire nations. Prague, Budapest, Warsaw, these cities became ground zero for economic transformation. Privatization programs, try to say that 6 times fast, sold off state assets. New currencies emerged, and millions of people had to learn how to invest, some for the very first time. And invest they did. It was like Shark Tank meets post-Soviet reality. The appetite was there, and the markets responded. The domino effect happened. The fall of the wall didn't just open borders, it opened minds. It helped unify Europe economically, paving the way for the euro and the European Central Bank that happened in the 90s. Financial services started gaining serious momentum just as these new markets liberalized. The wall fell and the financial innovation rushed in. It was the ultimate out with the old and in with the bold. So yes, the Berlin Wall did come down, but everything else, stocks, banks, capitalism, that all went up, 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 up. Until next week when we cover the building of the Great Wall, of course. I'm just kidding. Back over to you.
Welcome back to the broadcast. Next week here on Wall Street, believe it or not, at long last, we are expecting to get some bit of government data. The September jobs report is supposed to finally be released on Thursday, subject to change, of course. Tuesday, earnings from Home Depot. Wednesday, earnings from Nvidia. That's the big dog on Wall Street. We'll hear what Jensen Huang and his leather jacket have to say. And next Thursday, the team from Walmart will be reporting quarterly earnings. Thank you for watching Taking Stock all week long. Have a great weekend. We will see you Monday.
Woo! Thank God.